Hello, everyone. Going to present a lecture on accounting, FRA. We are starting with FRA LO1, and we are starting with the accounting terminology. These are the terminology which we use in accounting. The first one, we want to talk about assets. Assets are the resources which are managed by a business. In other words, this is the property of the business. They use assets to generate income, and these assets are divided into two. We have what we call non-current assets and current assets. Current assets are those assets which are used for trading purposes, and they fluctuate over the short term, and these assets are cash, debtors, inventory. The other type of assets is what we call non-current assets. Non-current assets are those assets which are purchased for long-term use. In other words, these are the fixed assets for the business. This includes land and buildings, equipment, motor vehicles, etc. The next term which we want to use to talk about is accountability. This is acknowledgement and assumption of responsibility for your actions, duties, and decisions. Someone who is accountable should be able to justify and explain his decisions and actions. The next one is statement of financial position. This is a statement that reflects the financial position of a business on a specific date. This is what we used to call the balance sheet, and the name changed it, and we now call it the statement of financial position. The next one is income statement. The income statement is the statement which shows the trading and performance of a company. In other words, here we calculate the profit or loss for the period for the company. We go to the next one, the accrued expenses. These are expenses incurred in the current financial period that will only be paid in the next financial year. Accrued expense are, in other words, we are saying the expense has happened this year, but it will be taken care of in the following financial period. The next one is depreciation. When we are talking about depreciation, we are talking about the amount by which a carrying value of an asset is reduced because of wear and tear. We know that when an asset is purchased, as we use it, it loses its value. So the loss of value is what we call depreciation. When we are preparing financial statements, we take all the information from the trial balance. And a trial balance is a bookkeeping or accounting report. For each debit entry, there is a credit entry. This gives rise to what we call the accounting equation, which is capital is equal to assets minus liabilities, or assets is equal to capital plus liabilities. Total debit entries will be equal to the total credit entries. That is when we are preparing the trial balance. A trial balance could be drawn by listing all the accounts and then entering the total of all the debit entries and all the credit entries, and these totals must be equal. That is, the debit entries must be equal to the credit entries. I have an example of a trial balance. The trial balance is of a company called KL Limited with purchases. The purchases figure will appear on the debit side, because as we buy, we will be debiting the purchases account. The sales, as we sell, we credit the sales account, so we credit it. Returns outwards, we credit it. Returns inwards, we debit it. And debtors, D2 so refers to a debtor. He owes us, and we debit the account. The next one, L Lions, is a credit, and so on. So the totals, as you can see, of our trial balance is 1,780 on each side. So we take all this information to prepare the financial statement. Financial statements consists of 5 items. So the first one is the statement of comprehensive income. That is the income statement. The next one is statement of financial position, then the statement of cash flow, statement of changes in equity, and these are accompanied by notes to the financial statements. So all these comprises the financial statements. So when we are talking about financial statements, we are talking about these 5 things. We are now going to the importance of financial statements. Financial statements track funds flowing in and out of the business. In other words, we need to know how much are we paying and how much is coming into the business. They offers the benchmark and feedback that help the company make adjustment. As a company, we sometimes need to make adjustments, so we are guided by the financial statement. What can we do? As you know, as a company, you are interested in profits, so you have to adjust here and there depending on the results of the performance. The next one, they determine the direction of the company. Again, as I said, companies want more profit, so they guide what needs to be done. We use financial statements for making decisions regarding expansion and financing. The more you make, it means you need to expand. So you have to make a decision after preparing the financial statements. After seeing the financial statements, then you make a decision. Another one is the marketing decisions. They provide data indicating aspects of company operations that provide best return on investment. The next item which we want to talk about is budgeting. This is a financial plan that is prepared for a future period. Budgets are classified into 2 main groups. We have what we call the operating budget and the financial budget. The operating budget consists of various budgets which relate to the income and expenses of a business. They are used to plan and forecast the income and expenses for a budget period. The next one is the financial budget. This consists of various budgets which relates to the assets and liabilities of a company. These budgets include the cash budget, the capital budget, as well as budgets for debtors, creditors, and inventory. The cash budget reflects the inflow and outflow of cash used to forecast and plan the cash flow. It can give management a hint on pending cash shortages, can also indicate periods when cash is likely to become available and when cash is not going to be available. So from there, they can make their plans. The reasons and uses of budgets. Budgets are used for planning. They also help to achieve goals. Budgets helps avoid debt and improve credit. They are also used for internal control. The budgets are used for communication and coordination. They also motivate an evaluation of management, right? As management, as the company performs well, this motivates the management. It is also used to evaluate the management, because as the directors are interested in more profits, this means that the management will be regarded highly because of their results. It also enables the company to meet its objectives. Budgeting ensures that businesses can fund its current commitments. We are now going to a worked example in a cash budget. I have a question to demonstrate how we prepare a budget. Use the following information to prepare a cash budget of Kuma Traders for August and September 2020. The information is as follows. On 31st July 2020, the bank account was 12,780. The actual and budgeted sales are as follows. The actual ones for June 2020 we have 135,000. For July, 120,000. The budgeted sales for August and September are as follows. August, we have 144,000. For September, we have 150,000. And all the information which we need to prepare the budget is given. We have 40% of the total sales are on credit. The dates of trade debtors are normally collected as follows: 50% in the month of sales, 40% after 30 days, 8% after 30 days, 2% is written off as irrecoverable. So this is the information which we use to prepare the budget. We have to make a schedule. 50% is received in the month of sales. So it means out of the budgeted sales of August 2020, we are going to calculate 50%, which we are going to regard as our cash sales. That is 50% of 144,000, which means 40% of that amount will be received in the following month, 80% after 60 days. So these are the calculations which we will make to enable us to prepare this budget. We also have information on what they are going to pay as expenses, as well as the other expenses. The calculations are given in this schedule. For August and September, the total sales are 144,000 and 150,000. Therefore, cash sales is calculated with 86,400 and 19,000 for September. Let's now go to the cash budgets. We have receipts, cash from debtors for June with that amount 4,320. For July, 19,200. For August, and the calculations are as shown to demonstrate how we got those figures. Then we add those cash, total cash from debtors. They are there. Rent, income. We are told that they are going to receive a certain amount as rent. Then we arrive at our total receipts. Then we go to the payment side, cash purchases. We have the amounts which we are given in the question, payment to traders, etc. So this is the cash budget. Thank you for listening, and if you practice, you will know how to prepare the cash budget.